Trent, one of India's multi-category retailers, proved its mettle in the quarter gone by reporting strong performance amid the decelerating consumption visible in the economy. Let's do a three-point analysis to really find out what has worked for the company and what is the outlook going forward. 1. Q2 earnings highlights. Well, the revenue growth was led by store additions and 14% year-on-year increase in the like-to-like West Side sales. Other income increased from 12.6 crore in Q2 FY19 to 43.5 crores in Q2 FY20. However, gross margins dipped because of a higher share of sales from the low-margin Zudio products. Now, EBITDA and PAT margins are not strictly comparable due to the implementation of the Indian Accounting Standards 116. 2. What's the outlook going forward on the company? Well, for H1 FY20, revenue from West Side outlets grew by 23% year-on-year, whereas the same-store sales growth stood at 13% during the period. In the retail industry, West Side has been one of the best performers as well. Now, the management plans to add 40 new stores in FY20, taking the total count to 200. Now, given the high degree of price sensitivity in India, value fashion has immense growth potential. To capitalize on this, Trent is expanding its Zudio store count from current 40 to nearly 140 by the FY20 end. In Q2 FY20, sales from Zudio stores contributed roughly 15% of the revenue. Now, should the company succeed in delivering the healthy volume growth and higher assets turns, the contribution of this format to the overall operating leverage can be significant. Now, Trent has been shutting down loss-making large Star Bazaar and small Star Daily format grocery stores since they are a drain on cash flows. Now, instead, the company will be emphasizing on the medium-sized Star Market stores to strike the right balance between investments and returns. Now, as far as Zara is concerned, considering the robust profitability and the cash flow momentum in this segment, new stores may be selectively added in the metros and in Tier 1 cities. 3. What should be investors' strategy now? Well, even in a challenging environment, Trent has been at the top of things. Now, this is reflected not just in the steady share price rally, which is 51% in the last 12 months, but also in its heady valuation, 87 times the FY21 earnings, and as per the current market price. So, the scope of any sharp re-rating may be restricted at the moment. And Moneycontrol research also believes that investors must gradually accumulate the stock on the downsides for a long term.